Hey everyone, Coach Investor back to our video for today. So as promised in the PayPal video, let's go over Palantir's earnings report. Now, by the looks of my thumbnail or my title, some of you might be disappointed already and say, oh, what is this guy talking about? Well, in my opinion, I don't think this report grants a 23% jump in the stock price. Of course, right now, it's already a 15-16% jump. And looking at futures, it might be even going lower throughout the day. Huge gap up in the stock. But that's about it for me when we talk about this stock. Let's talk about the business. Because the business, yes, I could see some momentum change or maybe the view of how Wall Street sees this company. Because if we look at the first comment here, we were profitable again this quarter, and we now anticipate that we will remain profitable each quarter through the end of the year. I think the market really appreciates this. Then he says the depth of engagement with and demand of our new artificial intelligence platform, AIP, is without precedent. And during the call, he continued by saying with regards to AI, so no, our basic, it's counterintuitive, but we're going to, within the context of being profitable, our idea, our strategy on AI is just to take the whole market. We have no pricing strategy, which is a bit weird to say during an earnings call. We're going to create a lot of value. We're going to get hundreds of customers and we'll price as we go. One of the things we've seen over and over again is when you're ahead of the market, you need to take territory. We want to take territory for two reasons. What are the two reasons? Well, one, we believe we have the only product currently on the market that can solve some of these intricate technical needs. And two, we've spent years building certain things like how do you manage knowledge systems across algorithms, across security interests. So there you have it already in the earnings call. Of course, some of the wording, let's say, might not be as appreciated by the Wall Street analysts as they were probably by some of the retail investors, but hey, we're already used to it when it comes to CARP. Now, when it comes to the actual numbers, of course, GAAP net income, we saw this positive $17 million, second consecutive quarters of positive GAAP net income, although the first quarter was a bit questionable there with the one-time sale. Then when it comes to GAAP income from operation of $4 million, that represents a margin of 1%, up 1,000 basis points year over year. This is also their first quarter of positive GAAP operating income. And we have 1 cent when it comes to GAAP earnings per share, adjusted earnings per share of 5 cents. Now when it comes to revenue, so as always, you can see here, US revenue when it comes to commercial or government is always more than the overall one because, well, it is growing faster. So total revenue grew 18%, US revenue grew 23%, commercial revenue 15%, US commercial grew 26%. When it comes to government, that grew 20%, US government 22%. Now with regards to that, right, the US and then internationally, we also have more information during the call. So Alex said here we have a tale of two cities here. We have America, which is growing around 28%. It is now 64% of our business. 4 years ago, that was 37% of our business. We are absolutely disrupting in the US of A. International is growing around 10%, and that is becoming obviously a smaller part of our business. Now, some might say this is bad because, well, we thought you would be growing internationally as well. Now, to be honest, I can agree with both sides here yet again. One, of course, growing international means more money coming into the business. But on the second hand, let's be honest, the US opportunity here is already big in itself. So if they can focus and see better results in the United States, let them do that. If they can prove and show that their products are superior to the others, hopefully internationally, especially in Europe, because in Europe, let's be honest, they're sleeping at the wheel there, they will notice, maybe we should adopt Palantir as well, and then that growth will reaccelerate. Remains to be seen. In my opinion, right now, I don't really have such a big issue with that. Now, before I continue, I would really appreciate it if you hit that thumbs up button and subscribe if you have not. We're trying to get to 30,000 subscribers at the end of this year. Thank you very much. And if you want to support me even further, do check out the links down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you. Now, as we continue here, customer count grew 41% year over year, 7% quarter over quarter. US customer count increased 50%. Again, no surprise there. Adjusted income from operations of $125 million, representing a margin of 24%. When you look at cash from operations, that was $187 million with a 36% margin. Adjusted free cash flow, it's not free cash flow, it's adjusted free cash flow of $189 million, representing a margin of also 36%. Now, when you look at cash, very, very solid there, $2.9 billion. And now, for those that have not been paying attention at all, stock-based compensation keeps going down each and every quarter. Now let's talk about another topic here. So total revenue growth, we've seen 18% there. Then average trailing 12 months revenue per top 20 customers, that grew 14%. Now, if we look at this number right here, and maybe I'll zoom in so you see it a bit better, because usually we get this number a bit bigger. Q1 2023 net dollar retention of 111%, which if you remember, last quarter that number was 115%. So we got a decrease here, not that great if I'm being honest. Now if overall that is at 111%, and then you have your 14% growth for the average trailing 12 month revenue per 20 customers, you might start to think, they're probably losing some small customers here and there. Maybe concentration might be too high with the top 20 customers. Well, we actually have more information on that as well. Thanks to Emir on Twitter, you can see here the top 20 customer revenue trailing 12 months versus total revenue. So top 20 customers keep growing, a safety net, he says, but concentration risk is decreasing. As you can see, Q3 2022, that was at 61%. Now we're at 51.4%. Still a high number in my opinion, but at least that is decreasing. As for the total contract value, basically the awards that it has been given or the agreements that we've seen with commercial or government, that grew 60% year over year. When it comes to billing, that grew 25%. Always great to see a nice growth here. But remember, it's usually over a long period of time. Now, as we look at the deals closed in Q1, 64 deals of at least 1 million, 22 of at least 5 million, and 8 of at least 10 million. Last quarter, that number here, the 8 was 5, then the at least 5 million was 11, and I think they closed, let me check, 55 deals. So again, a nice reacceleration, shall I call it, this quarter. Now, when we look at outlook, so Q2 and fiscal year, for fiscal year revenue actually increased a little bit from their previous guidance. Adjusted income from operations of between, well, before midpoint was $500 million. Now midpoint is a bit higher. So great to see that. And then GAAP net income in each quarter. Now, when you look at Q2 guidance, you see a revenue between $528 and $532 million. Now, when you annualize that number, basically you take the midpoint here, times it by 4, so you can see what's the difference between the fiscal year projection. But if you do this, you can see that this number is exactly the one that they gave us here, actually maybe sometimes a bit lower than the midpoint. So either they're sandbagging or they're anticipating something that might happen that might hurt their full year projections. In my opinion, they're probably playing it safe right now. And that's why if you take this number, times it by 4, you get exactly the full year expectations, which usually you want it to beat. So you put it a bit lower than what you think will happen. Of course, this is just my opinion. Do share your opinion down in the comments below. Again, if you want to see the graph, this is the way we look like right now. We're going to open just over the 200-day moving average. Big gap. Remains to be seen what happens throughout the day. But that will be it for me for this video, part 1. Part 2 will come probably later this week, so stay tuned for that. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and see you all in the next one. Bye-bye.